Welcome to the Property Buyble. This show was created for current property owners, people looking to purchase property, and for professionals in the industry. Hope you enjoy. Welcome back to the Property Buyble. My name is Kim Ackerman. I'm a buyer's agent from Trelease Associates in Sydney. Today we're going to be chatting about a topic I think is really not really spoken about much. It's land tax. It's something that I go through a lot with some high-end investors, but with everyday buyers, it's not something people know a lot about. So today I have with me to chat about this topic, Jennifer Mekhaeil from JMR Accountants. Welcome, Jen.
Thank you for having me.
You're very welcome. I think, I guess just to preface this whole episode, we're going to be talking about New South Wales land tax.
Correct, yeah.
And this is very general information, people. Please don't take this and go home and think that this is going to be specific to your situation. Every situation is going to be very different. But what I do want to go through with you, Jen, is just real general information on how land tax is worked out, how land tax is applicable and when it's applicable to people. And I think there's some good information in our topic today that people can take away with them.
Yes, I agree. I agree. I think this topic is spoken too late.
Yes.
So once people purchase properties, they then come to the accountant and go, hey, how do I avoid tax?
Yes.
How do I avoid the land tax? And it's just, so if you do have property or you're interested into buying property, I think go to your accountant and say, hey, what's land tax? How much do I pay? And so on. Ask these questions.
Yeah, absolutely. And know about it beforehand.
Correct.
And that's why I really wanted to chat with someone like yourself to go through this, because most people don't really even know what land tax is until they get a big bill the mail. Then they think, shit.
Yeah,
I should have known this before. There are ways that I could have mitigated this large bill or, lowered it a little bit with things that they can put in place.
Yeah.
So I guess to kickstart that, what is land tax when we're talking about New South Wales land tax?
Land tax is an annual levied tax from the government that is on the value of just the land.
Okay, all right. Yeah. So it's a bill that people have to pay for owning property, basically.
Yeah.
But there are a lot of different circumstances.
There is more to this.
There's so much more to this, which we're definitely going to go into during this episode. I guess before we start to get into some of the nitty-gritty parts of what land tax is, land tax is not applicable to all properties.
That's correct. Yes. So first and foremost, you are exempt on your main residence. So your home, you do not include this in the threshold, which we will go through soon.
Yes.
Primary production, so like if you own a farm, and of course, if you're under the threshold, then there is no land tax.
Okay. Yeah. So thresholds is a big topic and a big part of this, which we're going to explain more throughout this episode. But just for everybody listening, if you own a home, your primary place of residence, as Jen mentioned, you do not pay land tax on that. So everyone listening freaking out thinking they're going to get a bill because they've just bought a house, it's just not the case.
Yeah.
There's so much more to it. It's more so for people that own a portfolio and have multiple properties and go above that threshold, which we're going to chat about. So I guess, to first understand how the hell do I work out how much land tax I'm going to be paying this year, is to understand that every property has a land value.
That is correct, yeah. And we are only speaking about the component of like the land component.
The land component.
Yeah. So we're not speaking about the build, it's just the land component.
Yeah. So if someone just bought a terrace or a house in the North Shore or the Inner West and you just paid $2 million for it, it doesn't mean that you have $2 million worth of land value. Yeah. So it's the land only value that we're talking about on non-primary residence properties.
It's so good to understand this because we have clients who freak out. Just, hey, I just bought a $2 million house.
Yes.
My tax is going to be crazy. And I'm like, no, slow down. It's just the land value.
Yes, just the land value. So is there a way that people can work out a specific land value on their investments that they have.
Yes. So either ask your accountant to do it for you,
Yes.
or you can jump online to the Value Journal. And when you jump on, you'll be able to put in, it'll just prompt you through different questions. You just enter it in, and then ta-da, there's the land value.
Yep. So Valuer General of New South Wales is a website you can go on, smash in that address, and it's going to give you an up-to-date amount of what the value is on that property.
Yep.
And we really use that as a baseline during this process.
Of course, yeah.
Because this is a formula that we're going to slowly go through this episode so that people can work out sort of rough estimates
of their tax,
New South Wales only people.
Yeah.
I guess we should start by saying every state is so different, right?
Yeah. And every state have different thresholds.
Yes.
And Northern Territory don't have land tax.
At all.
Which is great. So
fantastic.
We'll come back to that.
Okay. We're not going to move to Northern Territory. But it's good to know that they don't pay land tax at all. I'm sure they have other rules in place though. Okay. So first we got to understand the value, the land value of that property. The next thing we got to go through to understand how this formula works is to understand what are the thresholds currently in place for 2021 for New South Wales. So there's a couple of different thresholds, aren't there?
Yeah. So there's just two. There's a standard and the premium.
Yeah.
The standard is at the moment for 2021 $755,000.
Yeah.
And then for the premium, the threshold is 4.616. Yeah.
Okay. Million.
Yeah.
Wow. Okay. So if people own a combined land value of less than the standard 755, they're exempt from land
correct.
tax.
Yeah.
Okay.
Yeah.
And if they go above that 755 but are below the premium, they pay the standard rates of land tax.
That's correct.
And if they go above the premium, then they pay the premium rates of land tax, so to say.
Yeah.
Okay. So when we go to the next stage of things, we really got to know what are the rates for those standard and premium thresholds as well.
Yeah. So we'll go through it in depth a bit soon.
A bit more, yeah.
But it's for standard it's 1.6 and then for premium it's 2%.
Okay. So now that we have the land value, the next component is understanding what the thresholds are and staying below those thresholds. The next component is the rates, which we went through, the standard and the premium. If I'm someone, don't know anything about land tax, and we've just gone through those three components, what is the actual formula that I use to work out, say, the standard land tax?
So first we would write down each and every single land value of your properties. So let's just say you're 5, we write down each land property of each one. And then if you're under the threshold, so in New South Wales 755, perfect. There's no tax on that.
No tax.
There's no land tax, amazing. Right? However, if you're over the threshold, what we would do is we would grab that figure, we would minus the threshold amount, and then we would times that by the standard rate, so 1.6.
1.6, okay.
And then you add this base tax little amount of $100 on top.
Okay, which is weird.
Which is, it's just, hey, have
it's
this.
just an extra tip for the government, I guess. Okay,
admin fees.
And the admin fees, exactly. So that gives you a bit of an understanding of how much land tax will be due.
Yeah. As long as you hold those properties in that year.
Okay.
So every year that you hold them, you'll pay that amount.
Okay, fantastic. And there's so much more to that. That is a real basic figure and formula that we do. There's so many things that affect that during this process. And if we just get into some of the tips for people or the ways that they can try and minimize their tax bill at the end of the year.
Yeah.
There's quite a few different ways that they can do that.
They can, yes. So
absolutely. And there's something that people don't talk about is writing a plan. You know, if you're someone like myself who wants to continue to build a portfolio, I might be able to say to my accountant, all right, so right now I have X amount of properties. In the next 10 years, this is how many I want to have in different states and so on and so forth. And so someone like you could come in and actually put a plan in place of how to mitigate that tax bill, knowing that information ahead of time.
Yeah, correct.
As well. Yeah. So, and look, purchasing property in different entities is going to minimize that land tax bill.
Yeah, because the threshold starts all over again.
Exactly. So if you have 5 properties in your personal name, for example, and then that that combined land value is sort of going up above that threshold.
Yeah.
So what you're saying is if we then buy a property in a different entity,
In a company, in a trust,
trust, those sorts of things,
that threshold will start again.
that baseline starts again. Now, that doesn't mean people should go out and buy property in companies and things like that. There are so many other contributing factors.
That's correct,
to that, but that is one way to minimize it. I guess buying in different states.
Yes, diversity. Yeah, 100%.
Diversity.
Yeah, and as well, there's more pros to that as well. You're diversifying your risk as well. So instead of just buying in New South Wales and relying on in Sydney suburbs, you've got properties in different states in Australia. So, the
diversifying your portfolio.
Yeah, exactly. Yeah.
And that's good from an investor perspective as well, because if the markets go down in different regions or different states and areas, you're sort of covered or you're saved because your properties are spread out so much.
Yeah.
That's what I always tell people anyway. So purchasing property in different states is going to be good as well, because you're going to have a whole different set of land tax rules also. Buying property with lower tax land tax values or lower land values.
Yep. This is something that we didn't touch on, but apartments have land value.
Yeah. People don't know that. The amount of conversations I have with people, and I tell them even apartments have land value, and they're like, really? And I'm like, yes. If you are buying an apartment with, 10 other apartments on a lot, there's still land underneath that lot. But those 10 apartments are sharing that land value. That's the only difference.
Yeah.
So like you said, buying an apartment still incurs some sort of land value and land tax component. However, it will normally be a smaller amount in most cases than buying a house that size on that kind of lot.
Yeah.
So if people are wanting to add to their portfolio, getting a little apartment with a small land tax value might keep you below that threshold.
Yeah.
I know when I'm buying for some big time investors that I work with, we work out the land tax value and if it's going to hit above the threshold, or what it's going to do to their portfolio. And when you have the land tax bill, those are extra additional expenses to understand when you're buying investments. A lot of people don't look at that extra thing.
Yeah.
I look at it. I look at depreciation and other types of things that I'm sure you go through with your clients all the time.
Yeah.
But the land tax is also something to take into consideration. And I think the last thing is find a good professional, a financial, someone that specializes in property as well and is able to sit down with you and go through these things and plan all of these components well ahead of time. You can't do this on your own. There are so many components to land tax and things that affect land tax and how to minimize land tax. So that's really the last hitting point, I'd say. Take all of those things into consideration. If you're wanting to do some rough figures at home, you can go through these formulas. And as I mentioned, these formulas are going to be on the Property Buyble website with an article of a step-by-step way for you guys to work this out, on your own. But then it's always good to speak to your accountant or financial planner, go through these figures as well and work out, am I going to be liable for land tax this year? Is this an additional expense that I have to take into consideration? Thank you, Jen.
Thank you for having me.
Thank you for your time. Yes, thanks for coming to the set and to the Property Buyble. This is a complicated topic, as I said, and people should speak to an accountant like yourself to go through these, because everyone has a very different circumstance and so many different factors are going to affect that circumstance. So thanks everyone for tuning in to the Property Buyble. As always, hope that you've learnt something. This is very general information we're giving about land tax just to give people an understanding of what it is. However, you can use some of this information, do some rough figures at home, but always speak to your accountant. Everyone has very different circumstances when we're going through this process. So see you for the next episode.